If you're an options trader who is struggling to generate consistent returns, it's probably because of one of these 3 trading risks. And the truth is, you probably have never heard of them before. These are silent killers that are sucking your profits, your consistency, and leading to small win, small win, small win, large loss that wipes out months of profits. So let me explain to you what each one of these trading risks are and how to overcome them. Number 1 is manipulation risk. Number 2 is market crash risk. And number 3 is volatility risk. So here is the truth. If you do not manage risk in trading, then nothing else you do really matters, because in the long run, you will just give back any profits. This is a quote from somebody called Steve Burns, who has a lot of followers on Twitter, but more importantly, he's been a professional trader for over 10 years. And I could not agree more with what he said. If you guys could just decrease your losses, options traders as a whole would be a lot more profitable. Option selling is amazing because the win rate is naturally high, but you're taking a lot of small wins and have one large loss that wipes out a ton. If you could just cut that loss in half, you could save yourself so much sanity, so many emotions, and save you so many profits that you're not giving back to the market. So what is manipulation risk? Manipulation risk is where market makers, hedge funds, and institutions are able to see your orders, manipulate the market to make sure that you get the short end of the stick. And this is happening every minute of every day. I guarantee that you're probably losing about $500 a month from this alone, given you trade a decent amount. So how does this work? Just like in the animal kingdom, when a hunter sees the prey, a lion sees a gazelle, it's going to go after it and kill it. That's exactly what happens in the market, which just undercover. We don't see it as well. But when a market maker, an institution, or a hedge fund sees your order sitting out on the market, because every order you put into the market, like, hey, I want to enter, I want to exit, I want to limit order, whatever, those orders from the broker are sitting on the open market exchange. Anybody can see it. But institutions and hedge funds have systems that see it, manipulate the options price just slightly so that it triggers your order, you get stopped out, you take a loss, and they turn around and immediately profit. If you've ever had a stop loss that triggered too early, or not at the right time, or price jumped up for some reason, that's the reason why. They're taking advantage of you and they are profiting while you are losing. And it's literally the system they're designed to do. And they're saying, Austin, how can they get away with this? Because the options market trades a lot less volume, fewer contracts than stock shares do. And so they can move the option price quickly and easily, just a microsecond, to knock you out of that trade. So that's what manipulation risk is. And I'll talk about how to solve it here in a second. But you're also dealing with market crash risk. As we all know, options are amazing because they are leveraged. I get a huge return off a little money, but at the same time, I can have a huge loss off a little money as well. If the market overnight turns around and crashes, you could easily lose thousands of dollars. And so that's something we need to worry about, and probably keeps you up at as well. You also have to deal with volatility risk. All the knowing the gamma, delta, vega, whatever, if volatility spikes, your trade could be going in the right direction, but you'll still lose money. And it's frustrating and annoying, and something that you need to learn how to master, because if not, it's going to master you. And even if you get all those things right, you're still having to deal with yourself. You're battling your emotions, fear, greed, the roller coaster. Should I stay in? Should I get out? Should I chase this trade? Should I not? Made money. Why can't I do what they're doing? And you jump to different strategies, and all of this emotional chaos that leads to inconsistent results. So that is what you're dealing with as an options trader. You've probably felt that before, right? That's exactly why we need to solve those problems. And now there's a lot of ways to do that, but the most efficient way is to use automation. Most brokers have a way to automate systems like Thinkorswim does and other tools like that. But if you are going to be a real trader who wants to invest in their trading and actually see results, you need a tool that is designed to work for you. So yes, you're going to have to pay some money, but it's going to save you way more than it ever cost you. And the tool that I'm talking about right now is called the Options Auto Trader. Yes, I'm biased. I am the founder of this. I created it, but I created it because of these three problems that were taking and making me lose so much money, not only just sleep at night and peace of mind, but making me lose money. And I created this tool called the Options Auto Trader. Shameless plug, because we've helped over 1,000 people so far automate their trading and finally see consistent results. So what does a tool like this allow us to do? Most importantly, it removes market maker risk. It removes manipulation risk. And it does this by putting a wall between your orders and the market makers. If a hunter in the animal kingdom cannot see the prey, it's not going to attack it, it's not going to kill it. That's why in the zoo, you can have a lion next to a gazelle, but there's a huge wall and an enclosure, and they're not going to kill each other. The lion would kill the gazelle. But you get the point. They can't do anything because there's a barrier, there's a wall. That's exactly what happens here in the market. I, through this system, put a barrier, a wall between the market makers and your orders so that they cannot see your orders. You might be wondering, how does that happen? Instead of your orders, like the broker does, by sitting them out on the overall market to be seen, manipulated, and taken advantage of, I keep your orders through the Options Auto Trader on our internal server, only to be instantly, in less than a millisecond, sent into the market to be closed when it needs to be closed. We have price detection algorithms, that make sure that it's not a price spike, but a real price move. That way we only send in the orders when it's time for you to exit, not some random price spike, not anything like that leads to a loss that you should have never had. This way you can finally have stop losses, finally have protection, even overnight, especially if you're trading futures where a lot of manipulation happens. But not only that, but we help you manage risk during crashes. The same way that new cars start automatically applying brakes when you get close to something that you're going to hit, this system does the exact same thing. When the market starts getting overextended, it starts applying the brakes for you by closing out your winners and adding hedges. Again, it's whatever settings you set, but you can set it so that it starts to slow down your momentum when the market's about to turn around and crash, so that instead of crashing with 10 open positions, you're only starting to crash with a couple positions and you took profit already. And so that's what we use our market analysis system, and that's amazing. But not only that, we also are able to eliminate volatility risk by scaling your trades. As an options trader, you should be always looking at where VIX is. Volatility should determine how you're trading. Any advanced trader knows this, but most people don't know how to do it because they don't understand Greeks. With a simple click of a button inside of the Options Auto Trader, you can immediately scale your trading based on where VIX is so that you're taking advantage when the market is in your favor and you're scaling down to have less risk when the market isn't. And now you might be saying, okay, that's awesome, but what about robots, Austin? I don't trust bots. I don't trust systems. Like, what happens if something goes wrong? And that's why you need a bot that is rules-based. It's not AI, not a black box, not something that you don't understand. A system that follows your rules. You say, do this, exit when this happens, enter when this happens, manage risk this way. And it actually does it, giving you full transparency and control over how much it's trading and what it's doing. And that's exactly what the Options Auto Trader tool is. I want to give you a chance to actually start a trial to it to go see how well it can work for you. Guys, I know that this can work for you, and I don't typically share direct pitches to the Options Auto Trader because my channel here is really to help traders grow. But the truth is, this is holding back so many traders, and I want to make sure you finally have a way to overcome it for good. So click the link down below and start your trial to the Options Auto Trader, and I'll see you in the next video where I go deep into strategies and education again.